That's why we do neighborhood level price exposure. We take a look at a neighborhood or a city and say, what's the prevailing dollar per square foot average? And we created a token that tracks that dollar per square foot average. So, and it's an always on trading environment. So you will always be able to buy and sell that token at some price in that moment in time. So I could buy a Beverly Hills token and sell it instantly the very next day. I could hold it for 10 years and then sell it after 10 years and capture my gains.
From deeds to digital, reimagining real estate liquidity. Real estate has always been powerful, but never particularly flexible. From Deeds to Digital explores how technology is transforming property from a locked, paper-based asset into something more adaptable, transparent, and efficient without losing its real-world foundation. Welcome to Streams to Impact, brought to you by Steve Talker Capital. I'm your host, Dr. Allen. Real estate has long been one of the most powerful wealth-building assets available, yet it has always been one of the least flexible. Capital gets locked in. Decisions move slowly. Liquidity often requires patience, measured in years and not weeks. But we're living in a moment where technology is quietly reshaping how assets are understood, valued, and accessed, without changing what makes real estate real. There's another way emerging, one where property remains grounded in bricks and mortar, yet becomes more transparent, more adaptable, and more responsive to modern capital needs. So, Beyond the Paycheck is the Financial Clarity Compass, a private educational masterclass that I created to help high-achieving professionals rethink how wealth is built, protected, and aligned with the life they want to live. This experience is my free gift to you, and to claim it, all you need to do is go to www.steedtalker.com/beyond-paycheck. Just a brief disclaimer before we go into today's show. All information shared on Streams to Impact is for educational purposes only and should not be considered investment, financial, legal, or tax advice. All investments carry risk, including the loss of capital. Always consult your professional advisor before investing. Well, what happens when one of the most enduring asset classes begins to evolve at the speed of modern technology? Today's guest is working at the intersection of real estate, liquidity, and artificial intelligence. Justin Hughes is the general manager at Shareland, where he is helping transform residential real estate into a more liquid, on-chain asset class, rethinking how property is accessed, valued, and exchanged in a modern capital environment. He also oversees the launch of Tycoon, an AI agent built specifically for real estate markets, bringing intelligent analysis to an industry long defined by slow processes and fragmented data. So in this conversation, we explore how technology can enhance rather than replace real estate fundamentals and what investors and professionals should understand as property ownership enters a more adaptive and transparent future. So welcome, Justin. Glad to have you with us today. So before we begin the technology, the platforms, and the AI, what personal experiences or curiosity first pulled you toward the idea that real estate itself needed to evolve, not just the way people purchase it?
Sure. Yeah. I mean, my real estate journey started early in my career, just was exploring real estate as an asset class. And, everybody says it's, anybody who's generated any lasting wealth has done it through real estate. And so I decided to get a lot more educated on the subject. And along the way, and I've always been a tech guy, so software engineer. And along the way, I started my first venture-backed company, which was realtymobile.com. And while there, we had successfully digitized the buying process. You could buy a share of a building online. We were doing online syndication, crowdfunding for real estate, but it really didn't solve the liquidity problem. And I vividly remember talking to investors who would need their money back for a life event, whether it was a wedding or medical emergency or a new business idea. And I'd have to tell them, well, I'm sorry, but your capital is locked up in this building for another, let's say, 5 years or whatever the life cycle was going to be for that particular project. And that was the spark. I realized we were treating real estate as a hard asset when modern investors needed it to behave like a liquid asset. And so I became obsessed with this question. How do we give people the wealth creation of real estate without the prison sentence of illiquidity? How could we decouple the investment utility of real estate from the physical asset? And that curiosity is what led me directly to Shareland.
Well, interesting how that has evolved. So, most people think real estate innovation simply means buying properties online, which that was in and of itself quite a revolution. But from your perspective, what is the deeper shift happening beneath the surface that most investors still are by and large not seeing?
Sure. Well, I mean, I think the deeper shift across the board is always just this decoupling of habitation from investment. And for 100 years, if you wanted exposure to the real estate market, you had to physically own and manage a building. You're forced to bundle your consumption where you sleep with your savings where you invest. And the innovation isn't just buying online, it's the ability to break that bundle. So we're moving toward a world where you can rent for lifestyle freedom. There's a lot of renters by choice, but still hold a portfolio of specific city-specific tokens for wealth building and be an investor by design. And so the hidden shift is that real estate is becoming a pure data asset, transferable instantly rather than just a physical shelter.
Well, so Shareland chose to offer neighborhood level price exposure rather than fractional pieces of individual homes. Can you give us a little bit more explanation as to how that actually works? So, what problems does that actually solve, and why does that distinction really matter?
Yeah, sure. So the way that I see most real estate investment options out there, you're either fractionalizing a physical asset or you're not. And so whether it's you're owning the entire asset, you're doing a fix and flip project, or you're buying an apartment building all on your own, or you're buying a piece, and it can be the traditional way. Let's say you've got a friend that's a real estate syndicator and you're going to go along as a limited partner in one of their single purpose vehicles that's going to own the asset, or even using a platform like Realty Mogul or any other online fractionalization platform. You're owning a piece of that asset, but the majority of the capital is locked up until that asset is sold. There is no liquidity. Now, of course, you could argue that you could have a secondary market where you could sell your fractional ownership, but that still requires and necessitates the existence of a ready and willing buyer. And then, furthermore, that then raises the question: how do you price such a fraction of an asset? I mean, for example, if you're doing a multifamily deal that's a lot of value add, in the very beginning, that asset is worth way less than what it's going to be at disposition. And do you take a linear approach? Well, we're halfway through, so let me sell my fraction at, a certain percentage of what the expected exit price is going to be. Does the buyer agree with that? It becomes really, really challenging just to price that fractional ownership and then find a buyer and then execute that transaction between you and the buyer. And so that's why we do neighborhood level price exposure. We take a look at a neighborhood or a city and say, what's the prevailing dollar per square foot average? And we created a token that tracks that dollar per square foot average. So, and it's an always on trading environment. So you will always be able to buy and sell that token at some price in that moment in time. So I could buy a Beverly Hills token and sell it instantly the very next day. I could hold it for 10 years and then sell it after 10 years and capture my gains. And so we've successfully decoupled that. We've successfully unlocked the liquidity potential by decoupling the investment from the physical asset. And the way we do that is by creating a token that tracks the dollar per square foot average of a neighborhood. It's a synthetic, derivative product similar to options contracts in the stock market, where if I'm either long or short on these contracts, I think it's going to go up or down. And depending on where the actual price of the stock goes, then my contract value goes up or down based on the motion of that underlying asset. And so I use that analogy to describe how the square foot token works. You're either on the long side of that token or you're on the short side of that token. And it'll trade at a premium or discount, which is there to account for an imbalance between the longs and the shorts. And then that allows people to basically get exposure to that neighborhood purely from a price perspective, completely decoupled from the asset, and gives them liquidity in a way that is not achievable otherwise.
And so is what you're talking about there, is this your product? Is this the Tycoon, or is that a different product?
Yeah, no, thank you for the opportunity to clarify. So that's for the Shareland exchange. And so the Shareland exchange allows users to buy and sell tokens that are tied to different neighborhood and city submarkets. Tycoon is our AI agent. I like to think of Tycoon as our investor relations. He has real-time information about everything that's going on the platform, access to all the data, and you can ask him questions, and you can express what your intents are, what your goals are, and he can help guide you towards whatever it is that you're trying to achieve. And so basically, Tycoon is designed to facilitate these financial transactions on the platform. And so, for us as professionals, our time is our most valuable asset. We don't really have 20 hours a week to analyze migration patterns, interest rate spreads, zoning changes in different cities. We're slow at processing, but we're really great at setting intent. And we all have an opinion. We all have an opinion on a different submarket. We may think like, oh, the tech scene in Austin is crumbling. I don't really have a lot of conviction there, but Miami's really hot. I really feel strong about Miami. And so you can express what those perspectives are, and you can set an intent, and Tycoon can help you walk through that process.
So where is Tycoon gathering the data?
Sure. So there's our data that we have on the platform just about the trading behavior of other people on the platform. It also has access to our neighborhood pricing data, which we publish through what's called our Oracle. Oracle is a Web3 term in the blockchain space, which is just to describe a source of information that the system has access to. And that is powered by transaction history data, MLS listings, basically, the same data that publicly available data. We're very transparent about our data and how we process it, so people can really understand where we come up with our figures on the neighborhoods and the cities. And so that's what Tycoon has access to. It also furthermore has access to news and events online. You can talk to Tycoon on Twitter if you're interested, and he'll be embedded on the platform as well to help power trades.
Okay. So real estate has always been intensely local. You always hear the phrase location, 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 and that really is true. And it's human driven by not just economics, but emotions and psychology. So where does that model begin to break down, and where can Tycoon, your AI agent, actually make markets more honest and more efficient or fair?
Yeah, I mean, the local and human model breaks down when it becomes opaque and exclusive. I mean, historically, the best deals go to insiders, off-market listings, pocket listings, things like that. And so it's the developers and the brokers who had the data first. And that local model is inefficient because price discovery takes months. AI and blockchain make the market honest by democratizing the data. On Shareland, our Oracle, the data feed is transparent. A doctor in Chicago has the exact same information and execution speed as a hedge fund in New York. We're replacing who you know with what the data says, which is the ultimate equalizer.
Yeah. Okay. Well, just in closing, as real estate becomes more liquid, more global, and increasingly mediated by technology, how do you think about responsibility, not just to investors, but to neighborhoods, to cities, and really long-term fabrics of our communities?
Yeah, actually, that's something I think about a lot. And I think the answer lies in a couple different areas. And one of them is protection, not just speculation. And I think one of the interesting things about um, a, a synthetic product like this built on top of real estate is that it creates an opportunity that doesn't exist otherwise with the traditional fractional model, whether it's online or offline, tokenized or otherwise. And that is giving the ability to hedge on the markets. So, you know, when you can take the short side on your own neighborhood, you can actually protect yourself. You can protect the equity in your own home for against a downside scenario. And for many Americans, that's their nest egg. That's their entire livelihood, or not necessarily livelihood, but it's their wealth.
Right.
Another piece is giving back to the community. For us, one of our goals is to take a percentage of our revenue and trade fees and utilize that to enrich the neighborhoods in which we're speculating. So what we can do is beautification projects, community development efforts, and things of that nature by basically co-investing alongside our users in these neighborhoods and finding underserved communities in the nearby area and allocating some resources towards improving those areas, which in turn would increase the profitability of those sidecar investments. And so what we want to do is create this self-fueling cycle that basically invests in a neighborhood, gains ROI on that investment, and then reinvests in the neighborhood to repeat the cycle. And so that's something that we're looking forward to launching as we grow scale. And then last, one of the other benefits of synthetic speculation versus asset speculation is that we're not actually buying houses in the neighborhood to do this. So we're not investing in real estate by snatching up all the inventory and driving up prices for homeowners in that neighborhood. We don't impact the housing prices at all because it's purely synthetic on top of the existing transaction activity that's happening in that neighborhood. And so, not only do we kind of solve that liquidity problem, and not only do we help enrich communities, but we also don't create an encumbrance on the housing supply in those neighborhoods at the detriment of the homeowners.
Yeah, interesting concepts there. So, thank you so much, Justin, for being with us today. In our conversation today, we highlighted a quiet but meaningful shift in how real estate is beginning to function not as a static, illiquid holding, but as a living market shaped by data, transparency, and intelligent systems. So, Justin shared a grounded perspective on innovation, one that respects real estate's human roots while acknowledging where traditional models often fall short. So his insights remind us that the progress is most powerful when it deepens responsibility, not just efficiency. So if you like to explore this evolution firsthand, Justin invites you to see real estate priced like a market, not a listing. So you can create your own account at Shareland, and you can find them at www.shareland.com, and this information will be in our show notes as well. And if today's discussion prompted you to reflect on how your own capital could work more intentionally and in closer alignment with the life you want to build, I invite you to claim Beyond the Paycheck, the Financial Clarity Compass. This private educational mini masterclass is our gift to you, and you can access it at www.go.steedtalker.com/beyond-paycheck. Thank you for joining us on Streams to Impact. Until next time, think long-term, steward your capital wisely, and remember, impact grows when innovation is guided by purpose.
Thank you for tuning into Streams to Impact, brought to you by Steed Talker Capital, a company empowering passionate professionals like you to develop multiple streams of passive income built on solid passive real estate investments. As a significant part of our endeavors to make a cosmic and meaningful impact for this world, Steed Talker Capital contributes significant portions of our profits to activities and organizations committed to better understanding the equine. These endeavors attempt to enhance the treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures great and small flourish abundantly. If you are ready to learn how our passive investors have earned an average 33% annual return on their investments, schedule your complimentary passive income to Prideful Impact consultation. Obviously, we cannot continue indefinitely to offer these valuable consultations for free, so grab your passive income to Prideful Impact consultation while you still can. Go to steedtalker.com/passive